So what does the Brexit instability mean for a company doing business in the UK? Well, Mark Wilson, Aviva Chief Executive Officer, is still with us. Mark was part of a contingent of CEOs that recently met with the Prime Minister and the Chancellor, Philip Hammond, at Downing Street. Mark, how did that meeting go?
It was a good meeting. The tone was incredibly constructive, and I think probably for the first time I saw a tone from the government that was actually pro-business, realising they have to sort out business if they want this economy strong.
What does that mean for the customs union? I mean, what would you like, actually, from the Prime Minister at this point in terms of assurances?
Well, what I'd like is, firstly, we need to sort out the transitional arrangement, the implementation period, as the PM calls it. And once you get that, and say it's for 2 years, you get a whole lot more certainty and everyone relaxes and gets on with negotiation. I think there's way too much discussion on labels. Hard Brexit, soft Brexit, customs union, no customs union. I think the labels are totally irrelevant, except maybe for politically in headlines. I think what's important is the deals of any term sheet, is the negotiation. It's what we come out with in the terms that's the most important.
But how's your business in the UK? So I imagine some of the insurance, you know, if it's personal insurance, if you live in the UK, the pound level doesn't really impact you at all. But you also must insure projects with money from abroad. Have those been impacted? No,
they haven't. So we do quite a bit of infrastructure. Actually, we like the UK. I mean, the UK, we're saying 1.5% growth. Maybe it's going to be a tick higher than that this year. I think the risk of the market is broadly priced in. We're finding we're getting growth in just about every segment of the UK we operate in. Home insurance, car insurance, pensions, annuities, bulk annuities. We're getting growth across the board, so we're not seeing it impact our sales at all. In fact, quite the contrary. Maybe in the time of uncertainty, people gravitate towards big brands, perhaps. So we're not seeing that. We're seeing people are maybe being a bit more cautious and saving. I think that's necessary in the UK as well. Remember, 45% of our business is also outside the UK. So as the pound goes up and down, that impacts your earnings as well. And over the last 12 months, with the depreciation of the sterling, obviously it's helped our earnings a bit.
Is there a danger that the Bank of England and the Governor Mark Carney actually raise interest rates earlier than expected, therefore squeezing household incomes, therefore impacting the insurance industry?
I think raising rates is good for savers, so people tend to annuities. It actually makes them more competitive. I think what the Bank of England should do, and obviously they're meeting, so what the Bank of England should do is look at it. The fact they're considering raising rates is positive view on the UK economy. I don't think they should do it yet. I think there's still too much uncertainty, still too much Brexit overhang. I think they should wait a bit, maybe wait and look later in the year. I don't think they should do it now.